So you're seeing long-term holders, and this is a phenomenon that happens always. When you have 98% of Bitcoin in profit, then what you end up having is people start selling. The long-term holders at this stage in the market cycle typically sell a portion of their Bitcoin with a plan of buying it back when Bitcoin drops again. I don't think we're in a cycle like we've ever seen before. And so I would love for them to be proven wrong and then have to come into the market again while Bitcoin is rallying at 120, 130. So I think it's a different market today than what they're used to seeing. But when you have this much Bitcoin in profit, people feel, okay, maybe I should sell a little, take some chips off the table, and buy on the dip when it comes back down. We'll see.
Recently, there has been a noticeable change in how Bitcoin's biggest investors view the market. Given that over 98% of all Bitcoin investors are profiting, some are beginning to secure gains by selling chunks of their holdings. This pattern commonly arises at this stage in a market cycle, when experienced holders, often known as long-term holders, cut their positions to buy back in when the price falls. However, the current market dynamic appears to be unique compared to previous cycles, and expectations of a quick decline and re-entry may not be realized. At the moment, the Bitcoin market remains ever-changing and volatile. Bitcoin's price continues to rise, recently surpassing $123,000 due to strong buying demand from institutional and retail investors. Headlines claim that spot Bitcoin exchange-traded funds are seeing significant interest from huge organizations and even some national governments looking for strategic reserves. Mara CEO Fred Thiel believes that the continual flow is causing upward pressure, resulting in short-term profit-taking, but with significant support, the market remains strong. In this environment, even if some long-term holders sell, they may have to buy back at even higher prices if Bitcoin's rally continues into the $120,000 or $130,000 range. Overall, the situation appears to be unfamiliar waters, with traditional market techniques potentially less effective than before, and every move by significant participants creating speculation about what happens next. Watch clips from the interview for further insights into Fred Thiel's conversation with David Lin. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
The strategic reserve is now signed to executive action. What is the next catalyst for the new all-time high that's coming up next, inevitably, hopefully?
I think a couple of things. For one thing, we're seeing all these Bitcoin treasury companies being created.
Yeah.
So where Michael Saylor before was kind of the person in town buying 900 Bitcoin a day, per his own admissions, you now have the Trump family, you have Cantor Fitzgerald together with Tether, and you have many others who all are raising multi-billions of dollars who are going to be in the market competing with Michael Saylor to buy Bitcoin, which is essentially going to drive number go up, I think, for a period of time. Stablecoin legislation passing through Congress and landing on the president's desk, I think is going to be another small leg up. Then you have market structure soon behind that. And then you have the strategic Bitcoin reserve coming as number 3. The SBR right now, based on what I understand from the White House, the SBR is now, they'll be receiving reports from all the government departments, so Treasury, et cetera, on how much Bitcoin the government actually holds. More than likely, it'll be a number in the 100,000 range because you have to think of forfeiture laws. And while the FBI or IRS may have confiscated Bitcoin, it may not be theirs to actually hold. There may be a victim that they have to deliver it to. And so you must probably have about 100,000 Bitcoin that they have. The question is then, what is the administration going to do to add to it? And what revenue neutral programs are they going to do that? And I think the US needs to move quickly because you now have other nation states wanting to do Bitcoin strategic reserves. And if they start buying Bitcoin ahead of the US, then it's kind of, well, the US, you guys were first, but you haven't done anything about it. And so I think when the US announces they're actually buying or adding to the Bitcoin reserve, that'll be another catalyst. So you have a multitude of steps. You're seeing some great inflows into ETFs right now, which is primarily retail. But you're also starting to see more and more institutional buying. There's a definite, I think you and I've talked about this before, there seems to be like a floor in the market where market comes down, there's always a buyer at some point.
What's
right?
the floor now?
Right now I think there's very strong support at 98. We're building support at 106. And, we hit 110, we bounced down to 108, we hit 110 a little bit more, we bounced down to 108. So I think 106 is pretty good support. And a backstop to that is 98.
Bitcoin price does not really reflect on the type of demand that we are talking about. Why?
So you're seeing long-term holders, and this is a phenomenon that happens always. When you have 98% of Bitcoin in profit, then what you end up having is people start selling. The long-term holders at this stage in the market cycle typically sell a portion of their Bitcoin with a plan of buying it back when Bitcoin drops again. I don't think we're in a cycle like we've ever seen before. And so I would love for them to be proven wrong and then have to come into the market again while Bitcoin is rallying at 120, 130. So I think it's a different market today than what they're used to seeing. But when you have this much Bitcoin in profit, people feel, okay, maybe I should sell a little, take some chips off the table, and buy on the dip when it comes back down. We'll see.
Is a dip going to be lower than 100K?
It's hard to tell. Bitcoin price is very much driven by a number of factors. On the one hand, you have global liquidity, M2 money supply, especially the asset side of that. And if you have a lot of government spending going on, a lot of liquidity coming to the market, I mean, the China Central Bank, globally, every country is starting to issue more debt. It's not just the US, and so global liquidity is growing rapidly. Bitcoin tends to lag M2 by about 90 days, typically. But you have these little foibles, like Trump could decide on a new tariff policy, and then you'll see the market drop. Or he may remove tariffs altogether, and the market will go up. So you have these, I call it policy changes that can affect the price of Bitcoin. You have also portfolio adjustments, right? Where you have people who have previously been in equities who now sell equities, go into bond portfolios, and as they re-level set their portfolios, what ends up happening is, Bitcoin is an allocation of their portfolio, and if they decide they're going to rebalance to or from Bitcoin, or they're just liquidating a certain portion to go into cash because they want to go in and buy something else, then they'll liquidate across their portfolio potentially. And so those are the things that drive these dips. The big dips, the 20% dips, those are more macro. The Fed decides that we're not going to cut interest rates at all. You'll see a $10,000 drop in Bitcoin on something like that. So it's very much the news is driving the price right now, unfortunately. But I think over time, there's just so much more demand than supply. And, as the number keeps edging its way up, you think about last year, we went through this period where we were kind of moving sideways for a long period of time. And then there was a dip, and then boom, bounce up, and then now we were up at a new level, right? And think about it, July of last year, we were bouncing in the $50,000 range. And then all of a sudden it was 70, and then all of a sudden it was 90, right? And then we were at 100 just after Election Day. So I think we're going to see that type of volatility continue. But what's interesting is that you look at the volatility curve, and we're really starting to see a flattening on a logarithmic scale of the volatility curve of Bitcoin. And if you look at the power law and you look at some of these other methods people use for evaluating Bitcoin price, I think what you're going to see is that the volatility in Bitcoin is starting to diminish. Don't know what that does to its attractiveness in the market anymore, but the more stable Bitcoin becomes, the more like gold it starts behaving, and the more like gold it will become.
In what sense?
Gold is historically a very stable asset. It doesn't move up and down very much until recently, when you saw nation states buying gold because they don't want to hold treasuries, they don't want to hold dollar-denominated assets, and they're viewing gold as a better reserve asset. People are starting to view Bitcoin as a very good reserve asset if Bitcoin's volatility decreases, right? No nation state wants to have to go to report that, well, we have a $500 billion in Bitcoin, and there was a 15% drop in the price of Bitcoin, and so we just lost all this. right? A politician would lose their job if there was a 15% drop in their reserve assets. But if you're sitting on $500 billion of gold and it moves 0.2%, nobody's going to worry about it. And I think as Bitcoin's volatility decreases and it adopts more of a traditional commodity asset type curve.
But that's a very long-term view.
Potentially, yeah. But we're already starting to see it. Just, look at the logarithmic power law curve, and you'll see kind of it's starting to flatten.
An executive order was issued by the United States to establish a strategic Bitcoin reserve, transferring seized government-held Bitcoin from liquidation to long-term national reserves. This reserve is expected to include approximately 200,000 Bitcoin and will not be sold, with agencies obligated to declare all holdings and investigate taxpayer-neutral ways to build the reserve. This move is part of a larger strategy that includes new stablecoin laws and a push for the United States to become a global leader in digital assets, while other countries examine their own strategic reserves. Strong inflows into Bitcoin exchange-traded funds and new institutional purchasers are affecting market support, but the price of Bitcoin remains volatile due to global liquidity, regulatory changes, and investor portfolio movements. Let's go back to the interview and watch more clips to gain insights from Fred Thiel.
Miners have the power to control Bitcoin price, especially around halving, because if you don't sell your Bitcoin, then the supply and demand, nobody's able to buy more. How do you comment to that? Is it true?
No. If you go back 2 halvings, yes. Right? Because the amount of Bitcoin per block was significant, and miners were really not in a hodl mode, and then they were selling, and then some of them would hodl. For most of 2024, all miners were in a full hodl. Now in 2025, you're seeing most miners actually selling their Bitcoin. I realize there's only 450 new Bitcoin issued a day, so that's not a lot. We're still doing a full hodl. And many of our peers, though, are selling. But then you have Michael Saylor buying 900 Bitcoin a day. So, miners don't really, the amount of Bitcoin miners sell from new production daily has very little impact. It's a different story if a miner like ourselves, sitting on approaching 50,000 Bitcoin, if we decide to sell 20,000 Bitcoin, yeah, that would move the market, definitely. We have no intention of doing that, by the way.
Would you say then your stock should perform like a Bitcoin treasury company?
It does, actually, which is a bad thing because we're a Bitcoin mining company and we're not getting value for the Bitcoin mining business. Our stock, up until very recently, has been trading a little over 1 times NAV of our Bitcoin holdings, which means that our mining business is not getting any credit. We're now starting to see a shift in that. For example, today the stock moved fairly dramatically, and we have been outperforming MicroStrategy on a daily basis. And I think part of that is a little bit how strategy is going about raising capital today. They're issuing preferred instruments that have dividend payments on them. You saw the Trump family convert that they issued today is fully secured. It's not an unsecured convert. And so that's secured by the family assets, the real estate assets. So I think the market is starting to price in more risk into these deals, and it's getting harder. And the challenge is that if you have large dividend payments, large demands on liquidity, you can only continue, if you would, by selling equity in the company or finding some other way of funding those dividends.
What do you think caused the price suppression of Mara stock, as well as some other miners year to date relative to Bitcoin?
I think that's very driven by the AI story, or the lack of an AI story around certain miner stocks. If you look at miners like Cypher, for example, they had very positive swing in the beginning where there was a lot of optimism about their ability to get an AI customer. They haven't been able to find an AI customer, and so then the stock started dipping down. CleanSpark and Mara have been viewed as kind of mining, quasi-mining pure plays. CleanSpark, yes. Mara, less so, because we also have a technology business. We also are beginning to work with inference at the edge. Our model, unlike many of the other miners, is we don't want to be an AI hosting company. We don't want to build powered shells. We also don't want to provide GPU as a service in the AI space. We're very focused on providing inference at the edge as a fully managed service. And I think that's the area where the margins and the long-term revenue streams are much more attractive. It's a lot more like Bitcoin mining in some ways, but it also is, you're not dependent on a single or multiple hosting customers to really drive your revenues. And it's a lot less risk from our perspective.
A year ago in one of the interviews, you said Mara is a capital allocator. What does that mean?
Well, think of our name, Mara Holdings. I have a background, other than being an entrepreneur, in private equity, and it really comes down to how you allocate capital. And so when we look at what we're going to invest in, we're constantly weighing, should I spend $500 million in building a new mining site, or should I spend $500 million buying Bitcoin? Last year, we spent a little over $2 billion buying Bitcoin. Why? Well, because the middle of last year, we felt Bitcoin price was going to move very rapidly upwards. And if you look at the investment horizon of building a Bitcoin mining site, it takes you about 12 months to build it until you produce your first Bitcoin. And then it's going to take you 18 to 24 months to pay back that capital. If you expect Bitcoin price to move more rapidly in the short term, you're better off spending the money just buying Bitcoin, accreting the value in the upswing of that, and then either leveraging that Bitcoin, borrowing against it, or generating yield off it, and then using that funds for other things. And so we're constantly evaluating how we're investing at the same time as we're constantly evaluating how we're raising capital. What's our average weighted cost of capital? Do we want to sell equity? Do we want to use convertible debt? Do we want to use debt on our assets? Do we want to use project financing? And project financing hasn't really been available to Bitcoin miners because banks weren't open to it. That is now changing. And I think what we're going to see is the cost of capital for Bitcoin miners is going to come down. The other thing that we've done is we've now started being very focused on what we call near zero cost energy. So we bought a wind farm at the end of last year. At that wind farm, we have essentially zero marginal cost energy. Whenever the wind blows, that energy essentially is free because there's no input cost. There's no gas, there's no coal, there's no input fuel. We can take miners that we've already depreciated fully from a site, and we depreciate our miners over 3 years, and we can relocate those miners to the wind farm. They operate only when the wind blows. But what that means is that there is zero CapEx spend on the miners, there's zero depreciation on those miners, and there's zero cost for the electricity. Every time the wind blows and those miners can run, we're generating Bitcoin at near zero cost. Over time, as we retire more and more of our fleet, as we continue to upgrade it, we'll build a bigger and bigger percentage of our fleet that operates not 24 hours a day. It may operate only 5, 6, 7 hours a day. But because the energy is free and the miners have already been paid for, we don't need a payback in the same time period. And that makes us much more capital efficient. Because think about it, a large-scale miner who is grid attached, paying 4.5, 5 cents a kilowatt hour, they are constantly having to upgrade their mining fleet, buy the latest equipment that's most efficient, and then what do they do with their old miners? They can't run them at their same sites anymore. So they have to either sell them, somebody like us maybe, or they have to do something else with them.
Many people think that Bitcoin miners can control the price, especially during halvings, by holding or selling their coins. Fred Thiel explained that while this was somewhat true several years ago, it has changed as the block reward has fallen and more players have entered the market. He noted that, in the past, miners could influence price because a larger share of Bitcoin's daily market supply came directly from their operations. However, with only about 450 new coins produced each day and investors like Michael Saylor buying far more on the open market, everyday miner selling does not make a big difference unless a miner suddenly sells a large portion of their holdings at once. He also said his own company still holds most of its mined Bitcoin, but other mining firms have returned to selling as margins dropped after the latest halving. He observed that his company's stock is often priced like a Bitcoin treasury company, reflecting the value of its Bitcoin more than the business itself. Changes in how different companies raise money, such as using secured debt, or instruments with dividends have made the market pay closer attention to risk. Fred Thiel discussed that some mining stocks are not performing as well as Bitcoin itself, partly due to investor excitement for companies with AI stories, as seen with Cypher and others. He disclosed that his company is focused on providing managed inference at the edge AI services, rather than entering the crowded GPU hosting market. He said they want investments to be flexible, so they compare the value of buying more Bitcoin or building new mining centers, depending on market conditions. The company recently invested in a wind farm, describing how they now run fully depreciated miners at nearly zero energy costs whenever the wind blows, making their operations much more efficient than those relying on grid electricity. Do you think long-term Bitcoin holders will be able to buy back at lower prices, or will this rally surprise everyone? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.